Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
What's up? I'm going to try to get this done before my Wi-Fi that's glued together with gum and duct tape folds on us. So let's make sure we got what we going on this week. How's it going, Jason?
Doing great, man.
All right, let's jump right in. So this week on the Weekly Spark, CPI report came in yesterday. What does it all mean, Jason?
Yeah, so the CPI report, or the Consumer Price Index, showed that overall inflation rose 0.2 for the month, which was in line with expectations, so no surprise there. Year over year, inflation stayed the same at 2.7, and that's also in line with market estimates. So helping headline inflation stay stable was a decline in energy prices and gasoline. But listen, there's definitely been some price increases due to the tariffs, but they are having a very small impact on the inflation figures. When you put it all together, Ryan, the weightings are so small, it only caused inflation to rise by 0.0086%. So Fed Powell, when are you going to cut rates, man? We're ready for it.
All right. That kind of leads us into the next one. If that Fed rate does cut, it equals an immediate mortgage rate drop, right?
Yeah, so this is a myth that, everyone thinks that rates are immediately going to come down, and that's just not true. So the last rate cut that occurred, the 10-year Treasury actually went up and rates got worse. So listen, I predicted that the rate cuts would happen in September, and most economists right now are agreeing with that sentiment. There's also dissension among Fed chair members. Some want to cut now. Some want to cut 50 basis points instead of 25. So, we'll see. But listen, Ryan, I'm sticking to my prediction that there is going to be a 25% or 25 basis point rate cut in September. So I want to go to the charts because I think the reduction of rates may already be priced in, Ryan. So let's open up let's go ahead and go to the charts.
There it is. Holy moly.
Yeah, baby! That's what I've been waiting for!
Dear God. It's beautiful.
It is
I had
beautiful.
to break up the dry rate talk. With a little comedic relief. So let's see what you got.
Yeah, so it does look like a beautiful chart, Ryan. All right, so listen, now that everyone is predicting that the Feds are going to cut rates, I feel like the rate reduction is already in play. And let me show you why. So right now, today, 15 basis points to the upside. Guys, we'll take it. That's going to help us on rates. But I'm going to show you this trend that we're having here. And I'm actually going to go to the 6 month here. And as you can see, we had this huge drop that really hurt rates. This is when we were talking about the uncertainty with tariffs. But as you can see, guys, we have really built this line of upward momentum here. And that's what I want you to see. So we're already seeing an incredible increase in rate, in bonds rather, which is going to help rates come down. We saw this great jump up to this Fibonacci. We're building this floor support here, and we're jumping up to the next Fibonacci, what it looks like here. So I think that it's already priced in. I'm going to look at the 10-year as well, and the 10-year is down 6 basis points, man. We'll take it. And same kind of trend here, right? We see this downward momentum. We bounce up. We went through these moving averages again, and we're building this resistance line up here. So we're pushing down to this 420 line. And listen, we're going to see some good things happening right now. I would say this, guys, if you're on the fence and you're not sure if it's the time to refinance or buy a house, absolutely worth at least getting a quote, finding out where you fall in line. You'll be surprised how low rates have gotten.
Awesome. I know we've seen some cool changes here this week and seeing some of these better rates coming in for our borrowers jumping into refi. So I'm excited about that. And the last one we've got is the loan spotlight. So this was a loan that we discovered this week. It's a W-2 employee that maybe their employer transitioned to 1099. What do you got on this one?
Yeah, so listen, as a broker, we always want to find the best and hottest and most really some of the best products that we can help our clients with. And here's what we got, guys. So we don't have to have a minimum history as a 1099 employee. There's no requirement for that. So if you have a buyer that has a W-2 job, moves over to a 1099, we can help them. There is no expense factor applied. That just means that if there's no deductions that they're taking, like someone that's self-employed, if they're just 1099 in the same line of work, we can get them approved. So let us know if you run into those situations. We'd be happy to help.
Awesome, man. Well, I appreciate your time today, and I hope hope this comes out okay. I think we got through it pretty decently well for what we're working with here. But we'll see you on the next week.
Thanks, Ryan. That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.